Good morning, everybody. Today is the 17th day in the month of February 2022. My name is Heritage. I just market analyst at HotForex. And quickly, as usual, we check through the markets, see what the dominant sentiment is, see their opportunities, what the big stories are, what currently driving markets really. And then these opportunities, if they are available, how we can take, advantage of it. But please remember that this is just a communication material, and nothing in this communication should be considered as investment advice or an investment recommendation. Just acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty. That any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is another light risk off session. This week we've had back and forth in terms of stories around the Russia Ukraine, where coming from late last week it was really high. On Friday going into Monday it was still tense, then Tuesday, Wednesday became better off, and now today we've had another downside in this particular, catalyst and news, right? I had this written out earlier. I said news reports out of Russia that Ukrainian forces have fired mortars and grenades into areas controlled by Russian-backed separatists, right? Yesterday we had, reports, right, that yesterday first we had reports that Russia has, put back some of the troops, right, from Russian media. They've put back some of their troops, right, from the Ukrainian border, from just adjacent of Ukraine. But then just yesterday as well, right? A top, U.S. official also said the report of Russian troops being withdrawn is false. And as a matter of fact, almost 7,000 or over 7,000 more troops were actually added. And then Ukraine also said that there are no signs that Russia, withdrew any of the troops from there. Yes, on the particular one that we had this morning, we had Ukraine deny the matter, but you can see the whole back and forth, still very much in play. And markets, first of all, hate uncertainty. But as a matter of fact, because we've had that downside coming on Friday, we've had some retracement. Markets are now starting to, be very much, dependent on information. And because it's still very much unclear, excuse me, because it's still very much unclear, markets are still, being edgy. Let's see the word edgy, as a way to look at it. When we had a report earlier in today's session, risk assets came down, right? But after the initial downside we had in risk assets, the pace has slowed, and some of them have even recovered some of the initial losses so far, right? It's now back to, let's hear what this one has to say. Let's hear what this other person has to say. Is it really Russia? Is it just, you understand what I'm saying? It's a lot of back and forth right there, and then markets are really being patient and being careful not to, take any major move on the timeline, because right now we don't have anything more concrete to work with. Yes, that's the information that is there, but because it's not Russia, it's Russia-backed separatists. That's one, right? The area that was, the area where the mortars and grenades were fired into are also Ukrainian territory. Yes, controlled by these Russian-backed separatists, but the entire thing is not really heavy right there. But definitely markets are paying very much attention to it. And then it will be driven further by any further headlines about this. So we need to pay very much attention. But for now, some ease is seen across board. Apart from this particular story that we've had, some positive for the market has been yesterday we had, the Federal Reserve meeting minutes, right, from the general meeting, and then they came out being less hawkish than markets expected. Not so much clamor for 50 basis point hike in the next meeting in March, right? And then, generally, more or less the same thing. Nothing really major to change. That has been, or that naturally is a good input for equities. Yes, the Russia story is, negative for equities generally, but this is also one of the positives I want to put at the back of our minds. Apart from that, we also had super good or good job numbers from Australia, right, where they added 12, almost 13,000 new jobs and left unemployment at 4.2%. That's the low going back to a couple of years now, right? That's also another good input that we had for Australia as well. Also a positive input, right? And then one thing I want to also what makes this very interesting as well, the full-time jobs were also good in terms of the numbers as well. Apart from that, this was also a month where we had the Omicron at the highest, at the peak in Australia as well. So having good numbers come out there, that obviously says going forward, when we have more months where not so much Omicron strain, that would also be even better for the numbers should print even better, and that should put the Australian, the RBA on their heels, right, to hike rates as soon or even earlier than they currently expect. Right now, there are calls for them to hike in their August meeting, some calls for July or June thereabout, but for now, it's a good input. I want you to pay attention to it as well. Another positive as well for markets has been, the positive development that we had in the US-Iran, nuclear deal so far. Now, when we had that positive development, like progress more or less, we had oil prices dip because that means that those strain would not reduce. This will happen yesterday. Right, we'll look at the chart now in a bit. Right, that happened yesterday. So for now, that was a positive. But when we had the whole Russia-Ukraine story come back into the market, so we had oil prices jump back up. But even now, it's easing back again. Generally, equities hold on to losses, but downside have been limited. Most of them have pulled back some of those losses. You look at the oil side as well. Yeah, I wrote it here. It dipped yesterday on the US-Iran nuclear deal progress, but has since benefited from the renewed Russian-Ukraine tension. And of now, it has even pulled back some more as well as these tensions ease more or less. As markets more win over it. As time goes by, the more this continues to linger and nothing really tangible in terms of action, markets will get over it, and then we'll focus back on inflation as well as central bank, tightening going forward. So there's still that to watch out for. For the meantime, though, markets are still very much sensitive to it. So we as traders also need to be very sensitive to it. Any new headline that deteriorates the relationship, that shows that there are more tensions coming up or increase the tensions, you expect risk assets generally to fall, you expect gold to rise, but oil to rise in this case, right? The likes of AUD, NZD card down, card could enjoy some flow from oil, but there's that to pay attention to. You expect JPY to enjoy it, you expect USD to enjoy it as well. And if we get any further, easing, further reduction in tensions as well, oil prices should come down, gold should also come down. You expect the likes of AUD and NZD to enjoy it, and likes of JPY and the USD to be pressured. So there's that to pay attention to. Keeping an eye on the news wires would be very helpful in the session ahead. And then something I want to pay so much attention to. The VIX initially pushed higher, but has since eased back, right? That shows the back and forth we have this particular story. In terms of the catalyst, I'm not really looking to jump in on this. I'm not really feeling it. Remember, it's not just about a trade, not about risk on, risk off. It's about why, how strong, and how much do we as traders expect it to last. That's where developing your bias actually comes into play. So there's that to watch out for. We also have on the bond side, the US 10-year bond initially jumped higher on rush for safety, but has since given back some of the gains, or most of the gains that I had written down here. On the cumulative strength and weakness side, yes, JPY still led the FX majors when I wrote this, but the NZD was also doing well. The USD was also very close as well. While on the other hand, we had CAD lagging amongst major FX, and then Euro and then AUD were also there as well. Biggest mover so far as at that time was 0.32 percent. That obviously tells you the size of the moves that we had. Now, I had this written down because after you've done your research and you've gone through what you want to do, or the information available to you, you've done your general market sentiment analysis, you've known risk on or risk off, you found out why, in terms of the reasons, you want to know how other asset classes are behaving and how individual currencies are behaving. You need to establish your view, and that's what will now tell you if you should buy or sell anything, right? From what I've written here, I wrote buyers, right? Current catalyst for risk off is weak. The reason, yes, is a big deal, but is it that big of a deal, right? Is there much follow through from this? The fact that the risk assets are really just weighing back those effects, those downside that we had, just more or less shows you the way markets are perceiving this. And I wrote here, I said, waiting for a clearer catalyst, something more tangible before entering into any new short-term positions. We're considering that we even have a very light economic calendar in the day ahead. So there's also that to pay attention to. On the wires, we have FOMC Bullard again on the wires. This has been a super bullish personality from the FOMC, right? So we want to hear what he has to say about the 50 basis points rate hike from the Federal Reserve in their March meeting as well, and how much he's been able to convince his colleagues. Let's see how that plays out. We also have Mester as well from the FOMC on the wires and unemployment claims like today that we have Thursday. Now I'm just going to run through the chart, look at what we talked about, and we're going to leave it at that particular point. From the equity side. Now, I like what I'm seeing now. We're seeing a little bit of, further contraction to the downside. Like I said earlier, we had a downside initial, we had our pullback, and we've seen another flush of downside as well, back and forth, and even the entirety of the move, right? On US 500, which is usually a gauge, a strong gauge for, market sentiment, has still been in a range coming from American session on Tuesday, right? Still around here, nothing really much I'm looking onto here, right? Right now we're still ranging around the 44.50 level, but it starts to also pay attention to. Right now, I'm not looking to jump in on any one of these moves that we're seeing right now. And you look at across the other equity space, similar story there. US 100 and Nasdaq still ranging around this 114,500 level as well. Not doing much so far today. The VIX itself has seen spike to the upside. Yes, we saw retreating like we talked about, but now we are seeing a little bit of pullback as well. The back and forth is not giving me something concrete that I want to work with. When you look at oil prices as well, this was the downside we talked about yesterday when we had reports of progress on the US-Iran nuclear deal, because this means that further tensions reduces. Iran as a major oil supplier also puts their oil back in the market, and that means that prices come down. But now that we're having Russia-Ukraine back and forth tension as well, that also means that Russia could also be handed massive sanctions if this escalates really badly, and that means that Russian oil is also out of the market as well. And now you're seeing this also move on. That tells you that individual currencies and individual assets also have drivers. Apart from risk sentiment generally, there are other things that you want to also pay attention to when it comes to general assets that can also help you as a trader to know what to do and what not to do at different times in the market. You look at gold as well. Amidst the tensions, we're seeing that upside jump up, right, that we've had in gold prices right now. Although with gold right now, I'm still being a little bit very much concerned with this. Yes, the tensions are keeping gold very much supported. Yes, right. We're trading very close to recent highs that we've had, not recent, more or less, mid of 2020 that we've had in recent time. There's that to pay attention to. But remember that the major focus still is after this. This is just a major distraction, right? After this is over, hopefully it gets over fast enough. Markets will go back to considering inflation, to worrying about inflation, worrying about central bank, interest rate hikes as well. All of that is very important for us to pay attention to. And if that is the case, that means that with central bank or like the Federal Reserve hiking or tightening policies fast, that should support the dollar, and that should pressure gold as well. So there's that to still watch out for those that are buying gold on the back of this negative environment that we have so far. But don't forget that that's still an underlying theme and could still come back in play right now. In terms of the major currencies and the risk proxy, currency, something like AUD for example, you can see a load of back and forth, initial downside, pullback, initial downside, a lot of messy action right here, volatility as well. And this is not something I want to be involved with at the moment. You look at currency pairs like CAD JPY as well. Similar story we have right there. Today's session, back, forwards, back. I'm not looking to, jump into this. If tensions escalate, you can expect further downside on risk asset. That's no doubt, right? Although on this particular one, you want to also be very watchful of the level we're trading at right now. I mean, every single time over the last couple of sessions that we've been here, we found a way to jump back above it. So there's also that to pay attention to. And then you look at the major pairs, for example, NZD, USD, for example, you can see the entire back and forth that we have, right? Let's see, looking for, all right, the entire back and forth that we have. Just look at it. All right, in today's session as well, but initial downside pullback as well, initial downside we're having pullbacks as well. So all this messy action isn't breeding much confidence. Remember, it's not just about taking a trade. It's much more about, I'm taking a solid trade. And this is not something I'm looking to get, attracted to right now. It's not looking to get or jump into at the moment. On the calendar today, it's going to be a light one. Like I said, we're going to expecting, we've already had job numbers for Australia, which was really good. Unemployment remained the same at 4.2%, and then new jobs were added, to the economy as well. So that's also one to pay attention to. But apart from that, we have nothing really major to pay attention. So yes, you talk about bullet on the wires, talk about messed on the wires as well. ECB Lagarde also has a speech today, but nothing really major. Today, the session will be driven mainly by headlines, right? Any further story on the Ukraine-Russia story will be very interesting to pay attention to. Apart from that, we might be in for a session where people are just laying in wait and nothing really tangible in terms of conviction lies ahead of us. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the training session. Bye for now.